Probably the easiest $2,000 I've ever made in 5 hours. Let's hop in and show you guys probably one of the easiest strategies to follow. So starting off with this strategy, all you gotta do is figure out what's the bias, right? So we're on the 4-hour time frame. We're gonna go ahead and mark the high here. Ultimately, right now, the market, it broke structure to the downside. However, we're kind of in a range right now. So what we want to figure out is where it's going to be going next. So we want to look for a break of structure. So something just like this, right, on the 4-hour. And then we want the market to pull back into it after it broke structure, that same area, right? And once we have that, that's where we can start looking for a setup. But once the market has pulled into it, you want to look for just a few things. Very simple. I have a couple MAs, right? Moving averages. It's starting to come back. And honestly, with a lot of back testing that I've done with this strategy, I would say has probably around a 75% success rate, if obviously every P's and Q's is checked off. So in this strategy, there is 3 moving averages. Now let's start with the first one. The blue moving average is a 5 close. Then you have the yellow one, which is an 8 close. And then you have the purple one, which is a 13 close. Simple enough. Before we even start looking at the moving averages, you probably wonder, why did I not look for a setup immediately when the market pulled into it, right? Well, how I need this setup to happen, at least in the order, is I need lows to be swept. I need to see significant liquidity swept. So in this case, yeah, the market pulled back in. Yeah, that probably was a setup back then, right? Because it did sweep some previous liquidity, but we missed that one. So we're looking for another setup. So we didn't take the second entry when it first pulled in because there was no entry for us right there. So we found that sweep of liquidity. Now we're going to start highlighting market structure and seeing how the moving averages work and play out with this. So ultimately, what you have to see is the blue and yellow crossing to the upside. However, with that, we need to first figure out market structure on the lower time frame. We figured out where we're at on the higher time frame in the 4-hour, but right now we're in the 5-minute. So I'm going to go ahead and turn off all the MAs, the moving averages for right now, because there's so many times they're going to cross. They may give you some mixed signals. So that's why when you align it with basic market structure, right now we're using market structure, same thing that we did on the higher time frame, we're doing on the lower time frame now. But what we're trying to figure out, where did the origin of a order flow setup, where did it begin? So easy. We already marked everything out. Now market structure, is showing us right here that it broke structure to the upside. I'm going to go ahead and turn on the moving averages. Now I'm going to wait for the market to pull back in, but I want to highlight, look how the moving averages are crossing, right? We have a possible demand, right? If you notice here, the blue moving average crossed the yellow to the upside while the purple one is staying below both of them and crossed it. Now, that isn't just your, biggest thing that we want to pay attention to, but that is definitely a significant confluence in this situation, because showing me here that this was the origin from this move to the upside. So that tells me that there's most likely a strong demand here, right? So I'm going to go ahead and highlight it. But another giveaway on that is there's a supply. So a transaction that I constantly preach, right? You have a supply that formed there. So obviously, the moving averages, like I said, how it's lining up here, right on that demand. That's telling me that's where the origin of the demand order flow is starting. But that supply, that transaction, and how that supply formed, and it has a reaction to the structure, which I'm going to show you guys in just a second, right? Like I always preach, I like to cover multiple candlesticks in that little group. I like to group them up. And right here, we have the supply, right? Market pulls up, reacts to it. Remember, we got that wick. It's sweep previous liquidity. This is an ideal setup. Now, we're not going to take an entry off of it. Right now, we're just I guess you could say this is a thesis, right? We're just using data to help us figure out where we're at and try to figure out where that next entry is going to be for us. So right now it's honestly just generating liquidity, right? And if you notice, it's generating liquidity right above that demand. That just makes it even better. So I'm going to go ahead and move that demand over to the side real quick. All right, it taps into that demand. Beautiful. That's starting our order flow. This is data that's showing us what's to come, right? So what is the first thing we're looking for? We're looking for the exact same setup. We want the MAs to cross the same way. It's sweep liquidity. Beautiful. I'm going to go ahead and just drag that line to the side there, because now I want to point out the valuable liquidity that's resting above and where the market actually should be targeting if you really sit there and think about it for a second, right? So this demand, that was clear as day. Beautiful. Now what we're going to be looking for, so I'm going to go ahead and remove the MAs because like I said, guys, we want to make it very simple. If the market structure is not there, and obviously on the smart money concept side of things, if it's not there, liquidity side of things, then you shouldn't be taking that trade. Now that we highlighted the liquidity portion, right, which is still one more valuable thing that I want to point out, which is obviously after it tapped that demand, you got to think about it for a second. Where's the liquidity aiming for? The first one, that point right there is the exact first point where we're probably going to see like a tiny pullback of some sort once it breaks that, or that's where we're going to see a significant entry setup after it breaks that. It all depends on this situation right here. So I'm going to go ahead and let the two MAs run, right? And I'm going to go ahead and just let them play out. I want them to cross, but we're going to see how it plays out when it goes through that liquidity portion. So right here, we're already getting that set up. It's already telling me here like, okay, there's a demand that's coming, at least a demand that's going to be respected. And if you've seen my previous videos, I don't like taking an entry knowing that there's significant liquidity, let's say just resting above it, because how I view it is there's a chance that it may sweep it and then it will sweep me. You don't want that. So beautiful. It breaks through it. We saw a tiny pullback. That's beautiful, and then it breaks a little bit to upside a little bit more. And now we're going to see that pullback. And now we're probably going to see our entry setup, right? So obviously right now, I'm just going to leave that MA just for now, just to make the charts a little bit more simple. I already have the confirmation on that there's a demand coming. It's sweep liquidity. Now we're looking for exact same setup on the transactional side. What do I mean by that? I'm looking for a demand to show itself after it reacted to a supply. That's the kind of setup I'm looking for. So as you can see right here, it's starting to recreate the exact same setup we found in the higher time frame. It swept the liquidity that was kind of resting right there, that it kind of created right there. Beautiful. We're going to bring the MAs just to kind of show us again that confirmation to find that possible demand. Beautiful. There's a setup right there. There's a demand that's resting right there. Clear as day. I'm going to go ahead and highlight that now. Beautiful. And another thing too is it's not just the MAs, right, that are just about to cross in the exact same way that we're looking for it to cross, but you also have a supply that's also resting above. And not only that it's resting above, but obviously, it reacted to it. That's what you wanted to see. It reacted to it. And then once it reacted to it, right? Because think about it, that supply right there, right? That's resting above here. Beautiful. It reacted to it. But then when it reacted to it, it didn't break that low, that demand. So technically, if you think about it, that is an ideal demand. And then with the MAs just crossing right there, that's kind of a prime setup right there, if you really think about it. So what I'm looking for to happen before we take an entry here is I'm literally looking for it to break that supply, tap right back into that demand. Then we can go ahead and enter and we can go from there. And now I'll show you guys how to do the, the TP portions and all that. I mean, I'm bringing the fib back just because I'm noticing a lot of people want me to start using the fib a little bit more, but let's just go ahead and highlight this. The reaction, MA's crossing over. Beautiful. We have everything we need. So we can go ahead and take an entry here. Now, stop loss, I mean, it all depends on how you want to do things. If you want to be a little careful, a little cautious, then give yourself some space. There's nothing wrong with that. And I'm also covering that demand that's at the low there. If you notice, like on the trending up, there's a little possible demand. I'm going to just cover that. Now, hop onto a higher time frame just to take a quick gander at the liquidity, just so you know what you're going to be targeting here. So I'm going to go ahead and also draw the fib. Beautiful. Now that we have the fib drawn out, let's just go ahead and pull it to that TP. That right there covers all the liquidity that's resting above it. So from there, we can go ahead and take our entry. Which I also wanted to highlight when marking out your fib. You can do it another way. So from this, I grabbed the whole 5 minute, low to high. I grabbed that whole range, and there it gives us a little bit more space, in terms of the TP, what you're actually aiming for. It gives you a little bit better RR, and that's the whole thing. You always need to weigh that out on what you're putting on as your stop loss to what your final TP is at that given point in time. That will significantly impact your RR. That's very vital. So now we can go ahead and just let it play out. And as it's playing out, I just want to highlight as well. Okay, that's beautiful. It's very quick. That was a 1-to-1 right there, just to that high. A lot of people probably move their stop loss to break even. I mean, you do what you want to do. I always say when you take a risk, as in whatever your stop loss is, that's what it is. This is 2,300 in a matter of 5 hours and 30 minutes or so, whatever it was. So that's what I constantly preach to people. When you take your trades, make sure you have confidence in each and every one of your trades. Whatever your stop loss is, that's what it is. And that's what you're risking. And that's what you're willing to lose. You got to look at it as that money is already gone when you enter that trade. And whatever the outcome is whatever the outcome is. I highly suggest to everyone, don't over manage your trades and don't over trade. Don't trade just because, oh man, I need to look for a setup today. Don't do that. Wait for the setups to come to you. Look how much work we did to find our setup, right? But it came to us, right? And it was a highly profitable trade. If you guys need any other assistance, help, whatever it is, the Discord is in my bio. We're giving free signals here and there. We're very active in the community. We're trying to make sure everyone gets a bag with us. And if you need any help, like I said, you're more than welcome to reach out to me or reach out to my counterpart Solo. Stay profitable.